Hello, everybody. Welcome back to Beer and Money. My name is Ryan Burklo, and on today's episode, we're going to be talking about mortgage recasting. It's going to be a shorter episode, but I do think this one's going to be a powerful one for many people because I don't even think they know what mortgage recasting is. So let's dive into today's episode. So what I want you to imagine is someone has locked in a 5% mortgage, right? And let's just say that the mortgage at the time was $800,000. Okay. And now rates are at 7%, and they're looking to free up cash flow, lower their monthly payment. But with way mortgage interest rates are now, if they're 6.5%, 7%, refinancing most likely is out of the question because they don't want to refinance at a higher rate. What mortgage recasting allows you to do is you put down a lump sum of money towards your mortgage, and it allows you to essentially lower what the mortgage is and keep the same interest rate that you have, therefore lowering your mortgage payment. Now, one caveat to this is not every mortgage company allows this. The federal loans, most of them, I don't think allow this at all. And so this won't be available to everyone, but it's definitely something to look into if this is what's on your mind, or maybe you're getting closer to retirement and this might make sense for you just from an interest rate perspective as well. So let's kind of go through real quick numbers here, right? So again, mortgage recasting, it allows you to take a lump sum of money towards your principal and recalculate your monthly payment without changing the interest rate. So as I was mentioning, let's just say, a person locked in $800,000 30-year mortgage at 5%. Maybe their monthly mortgage is like $4,300, maybe $4,400. This isn't including taxes or insurance. So the question is they don't want to refinance, right? If this is 3 years in to the mortgage, so now the 30 years down to 27 years left, they don't want to refinance and go up to 7%. And let's just say this person inherits $200,000, or they've saved up this extra money, they're wondering what to do with it, or they're getting close to retirement and they're trying to lower their expenses. So they take this $200,000, they throw it towards the mortgage, and let's just say the mortgage, and I'm going to use simple math here, let's say it's the 800 now goes down to 600,000. The $600,000 mortgage is now recalculated at the 27-year mark, so it's still 27 years left on the mortgage, but it's kept at the 5% interest rate. And now maybe the mortgage comes down to, and I'm making up numbers here, $3,000. So maybe there's $1,000, $1,300 a monthly savings that this person could have, or just an expense. It lowered it by that amount. That might be valuable depending on your situation. And so I wanted to share this with you just so that's another option for you when it comes to looking at your assets and refinancing and how do we lower costs, all of that kind of fun stuff. So I wanted to bring this up. I hope this episode was valuable for you. Make sure you head over to beardmoney.net. And at the top of the page, there's a contact us section up there. If you have any questions about this or any other financial topic for that matter, it's a great way to reach out to us. As always, we hope this episode was valuable for you. Cheers.
This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Quantified Financial Partners, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. This material is intended for general public use. By providing this content, Park Avenue Securities, LLC is not undertaking to provide investment advice or a recommendation for any specific individual or situation, or to otherwise act in a fiduciary capacity. Please contact a financial representative for guidance and information that is specific to your individual situation. Ryan and Alex are registered representatives and financial advisors of Park Avenue Securities, LLC. OSJ 200 Market Street, Suite 1850, Portland, Oregon 97201. Phone number 503-221-1226. Securities products and advisory services offered through Park Avenue Securities, member FINRA, SIPC. Financial representatives of the Guardian Life Insurance Company of America, Guardian, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. Quantified Financial Partners is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Ryan Burklo, CA Insurance License Number 0K24924. Alexander Collins, CA Insurance License Number 0H24806.
794954 1.1, expiration May 2027.